You are listening to chartingwealth.com for Friday the 15th of January 2015. We always start with our 2-day chart and we always start looking at the total market as represented by IYY. We have now 1, 2, 3, 4, 5 down candles. We haven't seen a completion yet on our latest 2-day candle. It's just drawn a day so far, but we do see a continued acceleration in the separation between the MACD and the red signal line. As far as our big indicators go, the MACD is a moving average convergence divergence. Don't know what that is. We've got great teachings at chartingwealth.com on it. It's the big indicator we use. You can also read more about it at Investopedia, but listen to our teaching on it first. You can find it there at the website. Also, we use the derivative oscillator. It's actually gotten bigger. It is oscillating wilder, but we have seen a little bit of a rollback in the market today. It's actually been up over the course of Thursday, 1.63% in total. If we drop back to our 4-hour chart, we will see that. Now, we don't have a crossover yet on the chart going up, but we're waiting for that. We did have the derivative oscillator crossover on our short chart, and we did have a bit of an up day, but again, that up day is balanced in the fact that the entire up movement is totally encapsulated in the down movement of just yesterday, that is Wednesday afternoon. So as you enter looking at the market on Friday, realize that. Now, what are we hoping for? We are hoping that we're going to see an uptick in the market on the short chart, because once we have that rollover occur, as the market rolled over going up back on the 23rd of December, we then wait for it to roll back down to parallel the current down move that we see on our big chart, because big charts rule. And as long as the big chart doesn't rotate over, but the small chart does, and then what we call backing up and then moves back in the direction of the downtrend, that is when you've got the sweet spot for trading, and that is for you doing a virtual trade. Remember, we're an education service here. We do not make investment or trading calls for you. We teach you virtually trading how to do it, and then once you get comfortable, you learn the ropes yourself and you can make your own decisions. You make them, but you don't make them based on any of our training. This is about training you to make your own decisions. Now, let's jump from the total market to the S&P 500 as depicted by SPY, which is the SPDR's S&P 500 Trust Series. It's connected again, 5 candles going down. Nice, solid trend line going down. Again, big expanse, derivative oscillator heating up, MACD still far apart. Crossed over originally going down back on the 2nd of December on the big chart. We then go to our 4-hour half-day chart. We see similar to what we saw in the total market. Remember, the S&P 500 is a lot of the volume of the market because it's the 500 big companies. It's not yet crossed over, but it's getting close, and we're hoping it's going to do that. Derivative oscillator's already flipped over. It looks very similar to the total market today. Doesn't always, most of the time it does. It was up just 1/100th% more than the IYY. The total market was up 1.63. SPY, that's Standard & Poor 500, up 1.64. So what do we see now? The big index that was up today was our techs. Tech stocks, as depicted by the QQQ or the NASDAQ 100, is what it relates to, up significantly today. Still have a good trend line going down. That's on the 2-day chart. Remember, it's 2 full days. If we go back to the half-day chart, what do we see? Well, again, we see up movement, but again, remember, the up movement that we see in this chart is totally encapsulated on either side by the down movement just afternoon on Wednesday. So, not to get too excited about things. It is up 2.13%, so pay attention to that. The derivative oscillator did cross over both in the morning and in the afternoon. Still don't have the MACD crossing over. Now again, we feel better about crossing overs when they parallel. That is when the MACD and the derivative oscillator cross over at about the same time. But we're not seeing that yet. We already have had 2 periods where the derivative oscillators cross. The MACD still not gotten up enough energy to cross over. So What do we want to see? Again, we want to see a turnaround. We want to see the market digest all these losses, move up some, cross over, and then move back down for us. Not happened yet, but we're going to keep paying attention to that. Lastly, we're going to range back out to our 2-day chart, and we're going to go to gold. What is gold doing? Well, gold is currently in an up move on the big chart, but again, it's not the big chart on gold that we've wanted to pay attention to, unlike our indexes. It's that 4-hour chart that had been magic for us before December of this last year. It is starting to work again. It crossed over going up nicely back on the 4th of January, and nice gains you could have made. It's now crossed over going down on the 12th, and nice losses that it's made. And you might say, losses? How can you make money when gold goes down? Folks, there are things called reverse funds that you can buy that move opposite of gold. There are reverse funds that move the opposite of the Qs. The QID is a double reverse fund. So when the Qs goes down, it goes up. That's what it's like being a little more sophisticated in your investing, because you can make money these days even when the market's going down. That's where the smart money's going. So, or you can just get out and let it ride down and buy things back cheaper. Please continue to study, continue to follow us. If you haven't already signed up for our newsletter, you need to get it, because you get this every single day. Plus you get the new trainings. Plus you get our charting layout that we're using every day. You can follow along with us. You'll have your own charts. It's from Free Stock Charts. It's our layout at Charting Wealth. You can also get our 15-minute How to Read a Stock Chart video. If you've not listened to that, you need to do so. Follow us on Facebook and Twitter, Instagram, and YouTube. We're here for you every day the market's open, plus our weekly review and forecast. Thank you so much. Hope that your training in trading and investing is going well. Be blessed.